How's it going, everyone? Welcome to my weekly trading review. This is for the week of 5/19 to 5/23. I had originally recorded this, but there was no audio, so sorry about that, everyone, and thanks to the people in the comments who let me know so I could re-record. So this week, I took 9 trades. 5 of them were swings, or I should say maybe 8 trades. 4 of them were swings. 1 was sort of part of a swing, so I'm not going to count that. We'll get to that in a second. And I had 4 day trades. So total trades were 8. On the swings, I was 4 wins and 0 losses. On the day trades, 2 wins, 1 loss, and 1 break even. Total profits of 520.64. So back on track after a negative week last week, which is great. And I think this is my biggest winning week to date. So pretty happy with that. Let's get into the market first. We'll get into the swings, and then we're going to get into the day trades. And I'll end the video with the open positions position that I'm in. As of last week, I'll put another position earlier this week. Okay, so market on a longer term D1 chart here, you can see big move down, tall bounce up above this kind of pivot point over here, back above through the SMAs, still below SPY 600, but certainly a pretty critical point and a pretty critical juncture that was breached on some tariff news. So we had a lot of tariff news coming pretty much from end of March here, Liberation Day tariffs, all the way down to kind of what's coming here, where we had the pause. We had suspicions of pause, a little news pops throughout over here on the M5 chart. And we had a pause on the China tariffs, they're down to 30%. And this week we had some other tariff news come in between Thursday and Friday. Trump announced a 50% EU tariff that has since been revoked as of Monday. Market had gapped up higher, so here's a little cheat, and you can ignore this tail. It was a gap and go bullish trend day. So definitely some tariff news coming out, but the main thing with the tariff news is that the reaction has been a lot more muted. So after this initial pause, which was very bullish, we've had a nice strong rally. We have a pretty tall bounce here. The volume has been meh until May, until it broke out over here, and then the volume is actually noticeably picked up over here. So that's something to keep in mind. Kind of light volume rally higher. And we're kind of in this bullish trend over here. You can draw this in a couple of ways. I think Spectre drew it this way on his graph. I had, this sort of channel coming into play, which kind of got breached a little bit earlier. So that trend line kind of got breached to the downside. Here's another trend line that I drew from here. And all that is pretty much intersecting is at the 100 and 200 day SMA. So this is a pretty major point at 575 for the market, that after the breakout, it came back and tested that level on the 23rd. That's what we're working with on a D1 basis. On a shorter term basis, you can see we had several down days, right? After a gap up and a rally last week, we stalled out for a couple of days, and then we pulled back over here. If I go into the M15 chart, this is pretty much what we had working with this week. So gap down, I believe that was the US downgrade on bonds, rally back up to a new all-time high, and they kind of stalled out here. Pretty much dead day on the 20th, poke through, triggered some sell stops. Usually it's an immediate reversal, but it took a little bit longer, and then it rallied back up. So I think that was a sign of some selling pressure, in my opinion. Next day, we gapped down, tried to rally back up over here, but couldn't quite actually get to this high. And then big selling pressure here on the U.S. bond auction news. 20-year bond auctions came in above 5%. That's the first time it's come above 5% since January. And you're seeing there was an unusual circumstance earlier where both bonds and stocks were initially going down, which is a sign of stagflation. So now those yields are going up, which is something to keep an eye on because that is a bearish sentiment generally for the market. So again, there's just one data point here. We'd want you. The more important thing is to see that 5% sort of persist. But that certainly is something to keep your eye out on. So we got some fall through over here, a little bit of a bounce, and then another big drop down to that 100-day SMA, and then the market spent most of the day rallying. So you can see that this week, gap down, rally, gap down, rally, gap down, rally, right? And then when that rally stalls, you can sort of short the bounce. Rally stalls, you can short that move. Rally stalls, harder to short the move. So, buyers are in here. It wasn't some crazy selling pressure. This was kind of the move of the week, I would say. There was also, I think, some VIX expirations or something like that coming up. I don't pay too much attention to that. I'm not sure how much of those expirations is, the tail does not wag the tail does not wag the dog type scenario where, VIX and that volatility is sort of inherently based on what the S&P 500 is doing to some degree. So I'll have to double check that, but the main point is that not too sure about VIX. I don't pay a ton of attention to it. I just sort of keep an eye on it from time to time. All right, so that's all the scenario. That's all the context here. Let's get into the trades that I took this week. And we're going to start with LUV. This is the first one that I closed. And I took this on the 8th over here. I took the 523, 29.50, 29 PCS for a 10-cent credit. And I took it because I had support at the 100, support at the 200, and support at the 50 SMA at that point, which if the stock is up, the more time the stock spends above the 50 SMA is going to slope up. So I knew that in a couple of days, as long as it doesn't completely tank, that this 50 SMA is going to be above my short strike, and that's going to be an additional layer of support that I can lean on. And then if that breaks at around 29, right, this is 29 here, I could still leg out and maybe ride it down like 50 cents here if I need to. And I have room to maybe this gap fill over here. We have this open long red candle here. So I have some room to leg out. That's kind of the play I took over here. If I look at SPY at the time on the 8th, so market was pretty flat. It was bullish, but we hadn't quite moved down. So I felt that, all right, I thought the market at this point was maybe going to be trapped in the SMA for a little bit of time. And I saw that this stock was pretty strong, even though the market was kind of flattening out over here. So I felt that if the market is flat, the stock could still rally. If the market goes down, I still have some cushion to maybe scratch out of the trade. And if it goes up, then I should be in pretty good shape. So I liked the scenario that I had for this trade. So we got that gap up on the 12th. This stock gapped up and then kind of sold off here, which was funky. But, I had the PCS. I just needed this to not go down too much. So it popped up over here. And again, every move up is better and better and better because it's going to take longer for that. I have more distance between that and my strike price. So that delta is going to move in my favor for that PCS. And then even on these sort of retests, we had a news move on some conference, poked, retest this level, bounced back up. And even on this bounce, I had another data expiration. I figured that, what are the chances that we get another long red candle through here? Very, very low, right? At the very least, we're going to stall it for another day, which is what happened. And I expired and I took the full credit in this PCS. So pretty stress-free, in my opinion. Never moved against me. And it really was just that, hey, I got the market right. I picked a good stock and ended up working out pretty well. Okay, so next trade that I closed this week was Rocket Lab. And you'll see on the daily chart, if you took this trade, you may feel some FOMO, but I do not really. So I took Rocket Lab on the 14th as it was breaking out of this kind of compression here. I took the June 20th $20 calls for $4.95. Took it kind of in the middle of the day here. the stock had broken above this resistance around $24 and was relatively strong at the time. Nice compression breakthrough, heavy volume in this bullish channel and getting above all of its SMAs. I also know that this is a pretty strong stock. So it rallied up here, pulls back, kind of tested that 200 SMA, and then it started to rally and bounce off of that level. So had some time to digest those gains. So took it and, I wanted at least a month, 5 weeks on this, just give it time for it to move. This also had a high IV, so I wanted to go deep in the money on the calls and figured I could sell some weekly calls. So I sold one weekly call and I took a 50% gain on that last week over here on the 16th. I sold the 25.50 calls, took a 50% gain on that, so nice small little win. And then on the 19th, we had a sort of a gap, kind of a gap down over here. Market rallied back up. If we look at SPY on the 19th, gap down, rallied back up. And then we poked up a little bit higher, had a doji. And then on the 21st, we had this little bearish hammer, and we had this little bearish hammer on SPY on the 21st. So this bearish hammer actually took profits over here on this day. And I'm going to zoom into the M15 chart just to kind of talk about that a little bit more. Okay. So took it right around here, test, rallied up higher, compress, breakout, getting challenged, breakout, getting challenged, breakout. And so I saw this move was getting challenged a lot around the $26 level. So at 1 o'clock, and if I go to the SPY M5 chart at 1, so here's the 1 o'clock candle. It had a nice, I should probably go to the M5 chart actually, because I think that is going to be important for this story. Okay, so market kind of gapped down the day. This stock was rallying up, and I had some pretty good profits, so I figured I was going to maybe take gains at a nice run up. You can see that in the M5 chart of Rocket Lab. Big run, and then retracement. Big run, retracement. So I want to take gains into strength on these big runs. Otherwise, because any of these retracements happen pretty fast, and then I'll have to wait another cycle to get in on the stock. So with this 110 candle, I actually took gains on a couple of my different swings here. So I'm going to leave this SPY M5 chart up for the time being. But at 110, I took gains on this stock around the $26 level. So I exited at 1:10 p.m. at $6.70, which was a 35% gain on the position. And look, SPY was forming some lower highs. The clue here for me was it hit that all-time high, or that VWAP from the relative high of the move, and it couldn't quite fill in the gap. We got some decent selling pressure here at 105, and ended up being the right call as I missed this move. I was not predicting the market to sell off here. I was really just thinking, okay, well, Rocket Lab has made a nice run here. Market's probably going to pull back. Rocket Lab's probably going to dip down here, I don't know, from this high, probably like a 50 cents, 60 cents, could even be like 75 cents or $1 if it's pretty bad. So might as well just take the gains here and, be happy with that position. 35% in a week is a pretty nice gain, and that's pretty much exactly what happened. So that was Rocket Lab, and then I also closed the short calls that I sold this week. So I sold the 523 $28 short calls for a 29 cent credit, and then I took I got out at 20 cents. So I took $9 on the short call. About 33%. And it was really just because I wanted to close the position, and I couldn't close the long call and have a naked short call out because I don't have the option level for that. So I got to close out both. But considering what it did when I put on the short call, which was over here, right? I put on the short call somewhere here. Stock rallied, and I took profits on the short call because of the time decay. So pretty good trade in my opinion. All right. So that was Rocket Lab. let's look at the next trade that I took and closed, which was Netflix. Netflix, pretty similar story. So I took it on this breakout on the 15th. Very strong daily chart. Pull back here, tested this level, and broke out of this compression on the 15th and closed above that level. So Netflix was looking pretty nice. And I took gains on the 21st as well at a similar time in on SPY. So let's zoom in on that. So Netflix, I went long 3 shares at 1,175 and 92 cents. So not pretty small share wise, but I mean, for me, I'm just managing that risk. So I'm willing to take $100 move against me in Netflix for me to, feel comfortable. So that was pretty much my stop in the trade, which was, I think, below some technical support. I'll flip back to the D1 chart in a second. So Netflix, strong move up, broke above this level here. And then I know it's a choppy stock, so it pulled back, and then we got this bounce. And so I got in on the bounce over here as I started to gain some relative strength near the end of the day. We got a nice move up here, compressed for a while, gap down, tested, held support, compressed for a while, and then we got the nice breakout today. And this is pretty much the move where I made a massive chunk of the gains. Stalled out around 12.10, and then I ended up taking gains at 12.08. Same time, the 105 candle. So exited around here at 12.08. So that was a, let's call it 1,176 to 12.08. So about $32 per share on that. Pretty nice gain. Netflix had a nice move. It was relatively strong, but again, I figured I had good gains. This market's pulling back, and this move looks pretty legit here in terms of the organization of the candles, the volume coming in. So just went to the sideline since I figured that this could pull it quite against me. All right, and then let me go to the D1 chart just to show you the support. So when I took it here, maybe gave it to about here, which if it broke through that AVWAP-Q, I would get out of the trade and take the loss. Okay. Last swing that I did was Adobe. So here's the setup on Adobe. May 16th, big gap up here into this D1 gap above the 100 SMA. Moved up here and came back and kind of tested and held this breakout on the 16th. And, market, wasn't doing too much here. So I entered in kind of the halfway point of this candle on the 19th, and I ended up taking profits near the high here at the 21st. So let's zoom into this M5 chart, and I'll walk through what I'm seeing, or what I saw, rather. Okay, so here's Adobe. Came back here, gap up, pull back, higher low, started to grind up. Another higher low started to grind up. So it was forming some support above that 100-day moving average, which is what I liked. I entered right around here, long 15 shares at 418 and 418.61. So basically saying that I could take a $20 move against me in the stock and still be okay. So this stock rallied, so it ended up being a pretty nice day trade, but my original target was to hold it as a swing. If I go back to this D1 chart, you will see that we have this election AVWAP coming into play around 428. So I had maybe $10-ish or so at 428, and I had to leave the 100 SMA somewhere over here, which was $8 below me. So I had some room for this guy to move up over here. Okay, so got on over here. We had a move up to these compression highs. Next day, gap down, tested the bid over here again, another higher low. So I like that. Started to grind back up, another higher low again, And then on the 21st, big rally up, and it broke above that 5-day high over here at 421.75. So I really like that. And I was fine with this action here as long as that 421.75 level was preserved and we inched up higher. So that's what I was looking for. But when we started to see some heavier selling pressure in the stock, and also it kind of happened before the, I think it happened before the market. Let me see here, 1250. Kind of around the same time as the market, but they didn't rally in this last little leg here, and did sort of sell off decently, but was pulling back here hard here and was just closing it below that level, which I didn't want. So I figured that that is still resistance, and it didn't confirm above that resistance. There's a good chance it gets smacked down hard, and let me just take the gains. So I got out, I entered here again, long 15 shares at 418.61, and I exited at 421 flat at 108. So I think in the middle of this candle, I got out at 421. So again, had maybe another dollar or two, $1.50 on the upside, but you're never going to snipe the top. I liked my exit on the stock, and obviously ended up being a pretty good move as the stock kind of completely tanked. And, still had a chance to probably scratch out the next day over here. But yeah, that was Adobe. So let's go into the day trades that I took this week. All right. So first day trade that I took was SPY. So on the 19th, I went long on SPY, and let me just get the information here. Yep, I went long SPY, 50 shares at 592.47, which is pretty much right around here. This is where I went long. And what I liked about this SPY chart was the following. So we had this gap down on news, pretty strong move on volume, pretty weak pullback on this bearish cycle here. Bear cycle kind of choppy, a lot of mini crosses, but pretty weak move on that bearish cycle. And I believe if I put up the prior day AVWAP, that was coming into play pretty much right around this level at 592.20 or something like that. So it was finding some support, some higher lows here, and I figured that I could take, and I sized it so I could take maybe a $6 move against me in case there was some crazy Trump news. So that's where I sized it from, and I figured I could take gains into this gap fill at 594, 594.27 I think was the close, or 29. So I pretty much took profits right below that close. So entered over here, and then was just starting to pitter patter. Then we got a nice break at this trend line. We're inching up higher, and this was a key tell. So we got this bearish hammer here, and then we got the red candle with a little bit of follow through. If we got another red long candle, that would be a pretty big sign that I might have to scratch out of the trade. But we held the 8 EMA, ignore this weird candle, ignore these kind of weird, like, random hammers. They actually didn't come up real time. When I refreshed the chart later, these sort of strange wicks came up. But essentially, we're just grinding here throughout these bad prints, poking up to a new high, pausing. So this is not a super strong move, but it's definitely strong enough to at least fill in the gap, in my opinion, but probably not going to have a lot of follow through after the gap. So on that candle here on 1210 is when I hit my fill, and I took a nice profit, $1.80 profit on that stock at 12:50 p.m. EST. SPY had a buying climax, so even if you're just trading that pure price action, good time to get out at this buying climax, because this is a pretty weak move. You can see this upward sloping trend line breach the upside, and then when you see these high volume candles, this move is slowly starting to get erased, right? And we're starting to leak lower. This is when you can get out of that position. And even if I got out here, I wasn't getting out a ton of extra. Was getting a ton of extra value here, maybe another 40 cents. Not bad, but wasn't missing out too much, in my opinion, with my target. All right, and then that was it for a good chunk of the day. Pulled back, And during that pullback, that is when I decided to look for some relatively strong stocks, and I ended up trading GE. So I took GE. This was the 19th. Here's the D1 setup. Very strong chart. You can ignore this line. It's not a relevant D1 line. That's just a line I drew intraday. Clear all these lines here. So very strong chart. Big head of steam here. I also liked how it did dip, and it was not, at least, I mean, it's a little overextended on the D1 chart, but as a day trader, I liked it because it didn't completely build on this candle and shoot to the moon. It did come back, test some level, and then rise up higher. That's the D1 chart on GE. Actually, almost traded that today, Wednesday, May 28th, but ended up not doing so. Okay. So this was a setup on GE. You can see how it filled in its gap in the first 15 minutes when SPY took pretty much the entire day. So it got through the gap, compressed, and then it broke above this compression here. So I was actually bidding around here, like 11:35, but ended up pulling my bid because I was really trying to get this crazy price at like 233.75, and I didn't like this bearish hammer, so I didn't take it in. And another entry over here, but I missed that entry because I didn't have the chart up, so missed this nice move on GE, but still compressed, and then it broke up over here at 235, so that's when I took the trade. I went long 100 shares at 235.50, and right over here, so this is when I took the trade on SPY and the stock. So really like this because the market pulled back, but this stock held all of the gains. So figured that if the market does make a move to the high of the day, I can take it out for a nice little profit. So GE had some follow through over here, couple bars of follow through. SPY, on the other hand, was kind of flat, and then we got this rejection here, kind of heavy volume, and you can see how GE erased all of these gains at 3 o'clock. And I actually scratched out of the trade here at 235.54, so $4 gain overall on the trade as a scratch. And honestly, the reason that I scratched was that it was pretty late in the day, and I felt that if this went against me, it would probably not come back in time, right? So it's also made a pretty big move. So we had one compression move up here, second compression move up here. So yeah, I felt that the chance of this coming back to me was not really strong. So again, ended up being a nice call. We still got a little bit of a move here, but would have had to take a loss on that position. Could have held, scratch if we held overnight. But when I was taking it late in the day and I got a little bit of fall through, I was not willing to let this position really move against me at all. So that's why I scratched out of that position there. SPY, you can see, poked up over here, but could not come back down. And kind of just ended up fairly dead for the last hour and a half of the day. Okay. So next day, I went short on SPY. And I'll show you when I did. So we got this poke through here. And I didn't short on this poke through because we could have easily went back in the range and triggered some sell stops. Actually, if you watch the Wednesday, the May 28th intraday price action on SPY, that's pretty much exactly what happened. But then we get some fall through. All right, so this is pretty heavy selling right now. This has some overlap, but we're hitting this. This is the AVWAP from the gap on May 14th. So this candle right here. Okay, that's something. We test this, we come back up here, and we're just kind of compressing a little bit. And then we get this nice break of compression here at 3 o'clock. So two things are going through my head. One, this is a really nice setup for a late day flush. We have some nice selling pressure. Market has been unable to recover the gap and unable to challenge the all-time high here. And I have some room until 588. So I did like this entry, but I also knew that, okay, well, I'm probably going to have my answer pretty soon if I'm wrong, because if this candle gets, this could just be like a poke. This sometimes what happens in a bullish trend where it's like you get this nice setup bearish-wise technically in the M5, but since the longer-term trend is up and buyers are conditioned to buy these big dips and they're still buying these big dips, if this reverses as a bullish engulfing candle, and that's when I have to be really careful and look to get out of the trade. So I get this red candle here. I bid at 590, so I'm short SPY 100 shares at 590 on this day, and then I get this bullish engulfing candle. It doesn't quite get to the top, but it does get pretty far. So already I'm on alert. I'm like, all right, look, if I get a nice leg lower, then it tells you that I'm track. But if we start to get above this candle here and we're not able to retrace this long green candle, we're going to have to take the loss. So we get this candle here. Don't like it. I need to see this erased pretty quickly. I don't see it erased on this 315 candle. So I take the loss at 591.14 right here at the close of this 320 candle. So exit pretty much right around here. So two good things. One, since I bid a little bit higher than the original price, save myself 20 cents, which I will always take. Second thing is I had a pretty clear game plan, which I was proud of. So I knew that I'm going to get my answer quickly, especially in a sort of a bullish market. And I'm not one to take a position, hold it through a ton of heat with shares overnight in this newsy environment. So I'm just going to cut the loss and move on. So I got the move up over here and ended up being the right play for the day. Right, and obviously I would have taken profit, sure, but my intention was a day trade. So if I wanted to hold it overnight, I probably would have just taken a PDS for the rest of the week, and actually probably would have served me pretty well. Okay, so that was that SPY. That I took a loss on that. Generally speaking, I liked my play on that. I liked the decision making on that, and I sort of knew the risks, so I felt that I traded according to my plan. I picked a good spot to entry. Took the loss, but not really too bothered about that. Okay, so then let's get to Thursday. Thursday. Let me pull this up on the chart. So the last day trade I took this week was Rocket Lab, and I took that on the 22nd, which was Thursday. My bad. Here's the Wednesday. Here's Thursday. So after this strong move lower, we had some nice selling pressure, and then the market slowly starting to kind of gradually move up over here. So on these LPT days, you're often better off entering a little bit later because it takes a while for this trend to be established intraday. So we get a move here, move higher, come back down, move higher over here, and we get this test low of the day that holds, and we start to get above VWAP. So here's a nice entry point here at maybe 11.05. As the market holds this low of the day, that's one entry point you could have taken, and you could have found relatively strong stocks over here, trade to the upside. You could also play the downside as well on a kind of day like this where it starts to hold, trade the downside, get rejected, play the downside a little bit, although you'd have to be a little more cautious because this low of the day has held twice. So when you're taking the short here, you may not expect to see it test the low of the day unless you see some really heavy selling pressure. So took Rocket Lab. Let's go to the 22nd here. All right. So pretty textbook setup. First off, with a gap down test, very strong rebound off that, and then we held all the gains. Broke out of compression here at 110. So during that compression, what was the market doing? It was pulling back and made a new higher low, preserve this bullish channel. So I entered this stock at 110. You can see how this stock actually made a new high of the day before the market moved, which is always what I like to see in the stock, that this stock is so ready to go that the market doesn't even have to go up for this stock to go up, right? It broke out of compression before that, and then it got the fall through. So I took it here. I went long 300 shares at 25.80. So got in here. I didn't want to make the same mistake that I made earlier with GE of trying to snipe 5 cents better a perfect entry. I just took the damn entry and got in on the trade. So we had a nice move higher, and I was targeting something like 20, maybe 35 cents, something like that. So I actually ended up slowly scaling out of this position throughout the day. So moved up over here and scaled out half at 26.15, somewhere here, scaled out another 1/4 at 26.25, and then scaled out the remaining at 26.31. So basically scaled out the position slowly throughout here for a pretty nice win, and obviously ended up getting to about 25.50, 25.60. But if I look at the average place where I scaled out, I got a really nice chunk of the gains on that move. So pretty happy with that. That was a pretty nice setup. Now, it was an inside day trade, which is what I usually don't take these, but part of me is also just I sort of know the price action of Rocket Lab pretty well. Like, I just know that it makes these big moves up and down, and I find that just very easy to trade. You can see that just throughout the chart that it'll make a big move, especially when it's really kind of moving like this, right? Like, it'll make big move down, big move up, compress, right? Big move up, pull back over here, then it'll kind of shoot up a little bit. Pull back over here, shoots up. Again, pull back over here, shoots up. So there's just like these little entries throughout the day where it finds some support and then it like shoots up really strongly. So that's just kind of what I saw here. And this was just one of the more clear examples that you could really take, in my opinion, or just shoots up here. And that's also important to know for swing trading. Again, when that kind of came into factor when I was swinging the chart, because I knew intraday that, again, it makes big moves up and down. So you want to exit into strength on some of those big moves up on many consecutive green, red candles. Same thing over here. Not that much over here. A little bit over here, but it's kind of hard to do that trade because it's below VWAP, so I wouldn't really recommend it. So that was all the trades I took this week. I'm going to end with the open position that I took on Friday, which was Qubit. So I took the 7.18. Pull it up over here. Yes, I took the 7.18 $9 calls for $5.20. Took it when the stock was around 13.60. So the stock is about 80 cents lower right now. Totally fine. What I liked on the stock was that it had this nice move post earnings, tested the bid, and it kind of broke up higher, which was good. And it broke into this gap at 12.73. So broke and closed to this level, and you can see how it's holding that level. And this compression happened, by the way, when the market was pulling back this week. So long that stock. Right now, it's still looking fine. And I also went long this stock because when the market on the D1 chart was pretty much testing that 100-day SMA, there was a chance that it could break through. So I wanted to pick a long that was very good technically and a little bit more agnostic to the market, where even if the market did break through, there's actually a pretty good chance I still profit on the trade, because these quantum stocks kind of rip and do their own thing. Once I had confirmation, then you'll see I have Roblox here as my position, which I'm going to talk about in next week's video. But that I can take trades that are being more, again, synced with the market and look pretty good, right? So on Monday, when I get this move up higher, I can take in some, I can add a swing position on the long side. So that's Qubit. It has room to this gap fill here, and the $9 calls give me plenty of space where I can lean on this support here at $10. It also, I know it moves quite a bit. You can see the ATR for this stock is more than 10%, so definitely a big mover, and it went pretty deep in the money, so that way the IV is just not as much of a factor. So if I took the $9 calls for $5.20, that would be basically, that means the stock should be at $14.20, but I got it. The stock was really at $13.65, so I was paying about 55 cents a premium, which is pretty dang good for Qubit, considering this stock will move 55 cents, in like an hour if it's really zooming. So yeah, planning to hold that for a while, and we'll see if it can fill in this gap here at around 17.50. If it does do that, I believe, I'm going to double check here, but I believe that should be a pretty nice gain on the position. Yeah, that'd be So I got it at $5.20. If it hits 17.50, you're getting it somewhere, maybe 60%. Yeah, maybe call it $8.50. That's probably what I'll get on that position. So that's a pretty nice gain. It's like a 60% gain on that position. Pretty damn good. So we'll see if it hits or not, but willing to give it plenty of time. So that is it for today's video. I'm doing a double check this time that the audio is on. But yeah, so pretty good week, and I'm going to try to keep it up for next week. This quarter, I believe I am 7 out of 8 weeks profitable. So missed one, but still kind of on track. And I think the gains for this week sort of made up for the gains of last week. So I'm kind of keeping in line with the average here. All right. Thanks for watching in, everyone, and I will see you all in the next video.